In this week's SoFi breakdown, we're looking at why the Santa rally did not happen, why the reindeer apparently refused to pull the market higher, and what kind of drama could be coming next for our favorite chaos fintech. Welcome back to Fintech Spy, where we don't just trade the volatility, we zoom in on it, overanalyze it, draw three different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into SoFi. Quick reminder, I'm not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably should not be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Let's start with the weekly chart, our medium-term view. On the weekly chart, SoFi's stocking had the classic sideways slide. Over the past month, price has treated the $26 to $28 zone like its favorite holiday Airbnb, checking in, checking out, and then immediately boomeranging right back. Stock RSI is oversold, which in trader brain translates to, surely it can't go lower. And in market reality usually translates to, watch this. The MACD is still sliding back toward neutral like it's slowly sobering up from the last rally. The one serious bright spot for the bulls is that we still haven't closed under that 2707 Fibonacci level. As long as that line holds, the medium-term story is less full Grinch and more grumpy elf stuck in consolidation. If we do lose it, that's when the weekly chart turns into a full-on group therapy session. Zooming into the daily chart, our short-term view. On the daily chart, we finally printed a real green candle after 2 weeks of getting dunked on by gravity. This latest move looks like a bullish hammer, the kind of candle that shows up after the market says, I've had enough, and retail traders say, one more call option for the road. That hammer is helping the stock RSI and MACD try to cross back over. That's technician speak for, maybe possibly, if the market is in a good mood, momentum could start tilting back up. It doesn't guarantee liftoff, but it does upgrade the vibe from doom spiral to cautious optimism with a side of emotional damage. Short term, the daily chart is basically SoFi standing at the gym door on January 1st. It could commit to a fresh uptrend, or it could just take one selfie and go back home. Next up, the 4-hour chart, our intraday view. On the 4-hour chart, the candles have finally broken back above the 50 EMA with convincing fashion. That's trader code for, okay fine, we'll stop calling it dead for now. When price gets back over that moving average, it usually means intraday momentum is waking up from the nap it took during the sell-off. The one bearish red flag is that the stock RSI is fully overbought, screaming, hey, someone took this bounce a little too personally. That sets up the potential for a small pullback Monday morning. Think of it like SoFi stopping at resistance to catch its breath, sip some water, and decide whether it's running a marathon or just jogging to the fridge. Overall, the 4-hour view says intraday traders are back to speed running emotional cycles. Panic, FOMO, relief rally, repeat. Let's talk options, because nothing says emotional damage like weekly contracts. Looking at the January 9th options chain, the market is pricing in about a $1.75 implied move, up and or down. That is Wall Street's way of saying, we have absolutely no idea, but we're very confident about it. Most of the put open interest is hanging out down at $25 with around 10.6 thousand contracts. Basically a crowd of traders huddled around that level whispering, this is the floor, right? The next closest chunk is at 26 with around 9,000, which starts to look like a soft cushion under price rather than a concrete floor. On the call side, the open interest is eyeing the $28 strike with about 8,000 contracts. Then you've got the extra dreamers stretching up toward 29 and 30. That's the classic, just one good day away mentality, where every green candle magically justifies a new price target and one more lotto ticket. The chain as a whole paints a picture of a market that is hedged, hopeful, and mildly unhinged, which, to be fair, describes most of us watching SoFi at this point. So what's the outlook from here? For SoFi traders, the Grinch Christmas was still technically green, if you managed to catch the continuous range between support and resistance. If you didn't, congratulations, you participated in the important holiday tradition of donating premium and questioning your life choices. Big picture, SoFi looks less like a collapse and more like a wind-up. Sideways on the weekly, trying to flip momentum on the daily, and showing signs of life on the 4-hour. Whether that wind-up turns into a breakout or just another fake out is entirely up to the market gods, the macro data, and how many people decide to tweet about fintech to the moon this week. If you agree, disagree, or think SoFi is just winding up for the next meme-fueled comeback, Drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech Spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm.